things into your notice that this particular quarter three in FY24, it was a bit soft quarter for us. And what we can say, it's a kind of more a blip in our growth journey. We face certain challenges in context to the bearing ring business, particularly in the domestic area. I would like to tell you that overall the decline on the top line in terms of revenue from operations is almost 15% compared to Q2 of FY24, wherein please note that 12% reduction out of that 15 is mainly, or rather it is from the domestic ring business only. Again, I would like to inform you that all out of this 12%, even 11% is due to the one large domestic customers who had lifted, or rather who took deliveries in quarter two on a very high level, and because of inventory pile up and their slower execution at their customer end, etc., they have lifted very lower amount or very lower quantum in this particular quarter. Uh, Apart from that, because of, as you all are aware, that this Red Sea crisis, Red Sea impact has a bit in revenue recognition as far as our quarterly numbers are concerned. But if this will continue, then it may result some kind of higher freight cost and incremental inventory level in terms of transit, in terms of warehousing, and so on. But we expect that it may not. While talking to the shipping lines and this thing, they are a bit having some positive note that there would not be much of the disturbance, and maybe in a month or so this can be regularized, or this can come back to the previous level. The another good news what I would like to inform that in our export business, that is mainly in US and Europe, we, particularly from the new customer, the new program what has been awarded to us, they have started quite positively and they have started lifting components. And again, they have given some indications that it will ramp up further in the coming quarters. So that is a good sign in terms of auto components business, as well as one of the main customer who is based at USA, what they have indicated uh, before a couple of quarters. Now they have already started lifting. They have already, what you say, reach at the annualized sales run rate, which is almost double compared to previous year. And again, that customer, US customer who has already offered certain programs for their European plants, those have also been started in this particular Q3 of FY24. So in FY quarter three of FY24, we had a good uh, turnaround, or we were there at the pre level of this auto component business. No doubt there are some kind of banning ring again reduction or decline as US level, but we expect that also to be normalized in within couple of quarters. With this remarks, I would like to take you through the numbers. Quarter three of FY24, we have recorded 273 crore as the revenue from operations, which was 321 crore in Q2, and which was 307 crore corresponding quarter of fiscal 23. In terms of EBITDA, we were able to achieve 20.6 percentage compared to 20 percentage in Q2. Here again, I would like to say, apart from this reduction and certain revenue recognition because of lower utilization operation, here the impact is the absorption of my fixed cost. Rest of the things are very much in normal. So once we will be having these kind of numbers what we had in the range of Q1 Q2, we will definitely come back, or we will reach to the our EBITDA average, which was more than 22 and half, 22 and 23 percentage. In terms of PBT, we had 500 million 50 crores in Q3, which was 63 crore in Q2. Again, the same impact is there in PAT, which was 370 in Q3 and 470 in Q2. In terms of segment business, again, bearing ring business is 56%, auto components 44%, which majorly contributes from the overseas market. From overseas and domestic perspective, we had an exports of 55%, vis-a-vis 45% in domestic. As I was mentioning that we had certain headwinds in Indian bearing ring markets, and it is again we expect maybe in the from the first quarter of next fiscal it may reach, or it may regaining into the level what we had. Further, we would like to inform that the solar plant what we were in the process of installation, it has already been installed, which was of 11.5 megawatt. Earlier, end of last fiscal, we installed 4 megawatt. All put together, today we have an solar megawatt capacity of 17.08 megawatt, including rooftop solar at our plants. We will be getting this benefit, significantly benefit of this 11.5 megawatt in the next fiscal, or from the start of April 24 onwards. In terms of business or operations bifurcation, in looking into the application of the products and the industries, 40% of our revenue comes from the passenger vehicle segment, 21% it was there in industrial, commercial and heavy vehicle it was 29%, and again in EV, as I was mentioning that we are getting good response in US, and the European customers have also started. So EV volume has also been increased in this current year, which is reaching to somewhere about 10% of my overall revenue. Total revenue from the operations for this 9 months, it was 905 crore, which was 1179 crore for the FY23. In this 905 crore of this 9 months numbers, 470 crores that is from export business, and 435 crore is from overseas domestic business. In terms of EBITDA, as I was mentioning, in terms of rupees, it was 201 crore almost, which is 22% for this 9 months number, which was 23.4% in last fiscal. Again, PBT PAT, it is 132 crore. PAT in this 9 months number, 178 crore PBT is there in 9 months of fiscal 24. It was 243 crore. That is mainly because of certain reversal of deferred tax credit, and 198 crore PAT, which was 132 crore in this 9 months. As I mentioned, that because of the lower utilization of capacity or the scale of economy, particularly in this quarter, has impacted our margin because of the fixed cost absorption. Operating cash flow, again, company is having good operating cash flow for this first half. It was somewhere about 90 odd crore, out of which company incurs capex to the extent of 40 crore. That includes certain equipments, a couple of small forging lines, as well as solar capex, which was pending or which was there in the FY24. Net debt, as already informed earlier, that company is a negative net debt company. Company do not have single rupee liability in terms of working capital as well as long term. Company is maintaining or having cash surpluses as on date. The return on equity, it is 27% in last fiscal. In this fiscal, it is somewhere about we expect to be in the range of 25 to 27%. These are the detailed numbers of operations which we have communicated, which we have uploaded, and certain balance sheet numbers for this 9 months as well as for the previous fiscals. Thank you very much for your patience hearing. Now, I request Team Equirus to open the session for Q&A.
We'll have a question and answer session now. Anyone who wishes to ask a question can use the raise your hand option. Once you are done asking your question, please use the lower your hand option. We'll wait for a couple of minutes for the question queue to assemble. We have our first question from Garvit. Please unmute your line and ask.
Hello, am I audible?
Yes.
Good afternoon, sir. My first question is on your India business. Like you mentioned, India business is facing headwinds. So, can you elaborate the same? Like, what is the exact issue which your customers are facing? Because if I look at the India's manufacturing sector numbers, so those numbers are telling a different story. Plus, you said domestic business is facing headwinds, but if I look at the export number also for this quarter, so those are equally down in the absolute terms in vis-a-vis domestic numbers. So, can you put some color on that?
Yeah, sure. See, I already informed you that in Q3, definitely the numbers for the overseas as well as domestic, it has gone down. I already informed you that in a domestic market, particularly one customer, out of my total drop, it was 75% drop is there in the domestic market, and out of that 75%, you can say 90%, that is 11% of my 15% drop, it is only from one customer, which has had an inventory pile-up issue. And as I was mentioning that, particularly in the second quarter, they have gone to, or rather they have lifted almost 2.5 times on a monthly average what they were there in Q1 also. So now that has been reduced, or that got impacted in our domestic bearing ring business. No doubt the other players, or rather my customers down the line, their customers are having good numbers, are coming out with the good results. But my customers, again, this inventory pile-up issue and lower production level has impacted me. In exports also, I told that in the particularly bearing ring business, I had some headwinds from the US. But apart from that, in auto component business, it is stagnant. And in the Europe side, which was very negligible, it has started ramping as far as auto component business is concerned.
You mentioned there are some headwinds in the export side also for the bearing segment. So can you put some color, like some more details? What kind of headwinds are there, and for how much time do we expect them to continue?
See, one of the customer in US, they are shifting their facilities to Mexico. So in this quarter, what we had in Q2, it was almost 60% what they have lifted in this quarter, because they are into migration, they are into shifting their facility of Mexico. Even I would like to tell you that out of this drop, maybe 10 odd percentage from already started in this current quarter, from in the month of January, from Mexico plant also. So it was a temporary dip over there. Apart from that, there is another very big customer who procures bearing rings for the automotive business. They have some slowdown from their overseas, or rather from their OEM and the what you say passenger vehicle segment in US market, that has impacted in Q3 also. So couple of these developments has impacted bearing ring business in US for this quarter.
Understood. So considering all these headwinds, like earlier you were quite hopeful of achieving 12% growth in FY24. But if I look at the 9 months number plus coupled with those headwinds that are expected to continue for next at least 2 quarters, so are you still looking for the same guidance, or will you slightly consider a downward estimate?
See, I'm not looking the same headwinds for the coming 2 quarters, but I am expecting, no doubt, we were stated certain numbers in the initial quarter. It was not any kind of what you say wrongly pass on numbers or something. It is the market something what we didn't expect to reduce in this way. And even the guidance what we are getting from our customers as of now, they are still indicated that this quarter is bit slow compared to other quarters, but from the very what you say first quarter from FY25, it will go up and you will be regaining the level in the first half of fiscal 25. In terms of my guidance for the Q4 or FY25, Q4 definitely we would be in the average of what you say H1 of this fiscal, or maybe an average of Q1 and Q2. In terms of FY25, we are very much hopeful this end of FY24 numbers will be having growth in terms of 15 to in the range of 15% to 18%. But again, any kind of further disturbances, as I was mentioning, in Red Sea crisis, or maybe at the customer level, that may impact. But this is the message what we are conveying on the guidance, on the expectation, on the envisaging of our customers. But we are very much hopeful for the new customer who have started and who have promised, or rather who have indicated to increase their level in the coming quarters, and it would be ramp up. And that is at multiple plant of that customer.
What is the monthly order run rate?
As of now, it is in the range of 110 to 115 crore.
I think it is falling for the last 2 quarters, right? I think earlier it was 120, then 110, then in the range of 110 to 115. So is there any specific reason for it?
No, there is no specific reason. This is some kind of deviation in even in the forecasting of my customers.
So is it likely to increase in the upcoming quarters?
Definitely, it would be increasing in the next fiscal.
Understood. And sir, you mentioned Red Sea impact. So are you people witnessing any kind of difficulties in passing on the extra freight cost?
Till date, it is not that significant. And again, Red Sea impact will more give me some adverse impact in terms of warehousing, in terms of inventory transit. As because my 50% of my overseas business is there in the what you say CIF or DDP basis. Rest of them are on FOB basis. But as far as transit and the revenue recognition what we have, so there we may have, as of now till date, it's not significant.
50% is CIF, so that means it is a significant percentage, no?
Yes.
That 50%. Means it is going to impact our margins if the
but definitely. As in past also, we had a quite severe situation like this, wherein my customer have supported whosoever is having CIF terms. And same we have started with our customer, interacting with our customers, and they are positively reverting, because this is something which is abnormal, and it is for their old sources, or rather old sourcing from the Asian market.
And sir, one last question.
Yeah, Garvit, could you please join back the queue?
Okay.
We have a next question from Sonal. Please unmute the line and ask your question. Hello.
Hi, can you hear me now?
Yeah.
Thanks for taking my question. Good afternoon. So could you give us the details of the scrap sales and other operating income for the quarter?
Okay. Let me bifurcate this 273 crore operations revenue. In that, 249 crore is from my rings and components. Almost 20 crore it is there from the scraps. 4 odd crore is from my export incentives, and other income, which is mainly consisting my interest income from the fixed deposits and certain short-term investment, which is somewhere about uh, uh, apart from forex gain, it is somewhere about 1.5 crore, 15 million, and forex gain is to the extent of 2.5 million, 25 million. Sorry.
But that is included in the other income line item, right?
Yeah, other income. I have given you even the bifurcation of other income. All
Right.
put together, my quarterly other income is somewhere about 45 million. There, the breakup is this.
Got it, sir. No, thanks for that. So the other thing I just wanted to understand was around this. I mean, how much is Europe of your revenues now? Because I mean, like, it's been declining for a long time, and I think we still not
Yeah,
hit
it
the.
was. Yes, it was declining till this one till Q1, Q2, and it has bit improved in from the Q2 also. And today, at the end of this 9 months, let me tell you, for this 9 month period, it is crossing 15.5% of my overall component revenue,
So,
which was lower on earlier quarters.
got it. So we are seeing that for Europe things are bottoming out now, or you will still wait and watch
No,
to
it's not bottoming out, but we are getting some positive response. See, it is definitely my existing business is on the same level what we had. There is no much improvement, or rather, not this thing. But mainly the growth what we have seen is from the our new customers, even in the Europe market. I was mentioning that one of the main customer in USA, they have given us certain programs for their European plants, and that those have started, and further it will be ramp up in the coming quarters.
okay, okay, sir. And I mean, like, so overall, what is, I mean, like, on a full year basis, how do we see things? Because Q2, right? Like you would Q2, you had indicated there was this exceptional business from one customer. Now, obviously, in Q3, that exceptional business has gone out, and that is sort of why we have seen a sharp drop in Q3. So I'm just wondering, like, on a normalized run rate basis, how do we look at this? Right? Like, is it
For the Q4, it would be in the average of Q1 and Q2.
so even if that customer doesn't come back, or you expect them to come back?
Um, we expect them to come back maybe in the February onwards. But again, the business from the overseas, we are expecting something ramp up.
So exports from here should see some improvement, is what you're saying?
In the auto component segment business, definitely it has improved. In US, we had, as I was mentioning, that dip at the couple of customer level. One customer who is mainly there into automotive segments, and another customer who has, or rather who is in the process of shifting, migrating their plant to Mexico, or for certain facilities to Mexico. So they have hold, or rather they have just deferred their supply, and maybe next quarter onwards we would be full-fledged supplying to their Mexico plants.
Eh, Okay. And just lastly, I mean, like this FY25 expectation of 15 to 18% growth, is that driven by the new products, or is there some recovery you're factoring in for the existing as well?
No, definitely mainly from the new product, new customers, and even we expect some kind of recovery from my existing business also.
Got it. Great.
But
Thank you so much.
anything beyond our expectation in the domestic regaining, if it is quick, then definitely this number may go up with ours, as well as the even some kind of disturbances in geopolitical or in certain scenario, then maybe we are not expecting any kind of turnaround in the existing business.
Got it. Great. Thank you so much.
Yeah.
We have our next question from Jason. Please unmute your line and ask him.
Am I audible?
Yeah.
Hello. Yes, yes. Thanks for taking my question, sir. So, just wanted to understand, of course, a lot of questions. Also, auto component business is more exposed to the export side, and bearing rings equally distributed between domestic and exports. Just wanted to know what is your 2-year outlook for both these segments. If you could give us, in terms of exports and domestic both.
Definitely, whosoever players or peers are there in this business, they are looking better auto component market. And for us, Rolex, we have some very good potential, or rather the market which are yet to be addressed in the European segment, particularly for auto component business. So, but at the same time, we are expecting, the bearing ring business also, which is temporarily been affected. Again, it would be coming, or rather getting back to their level in the overseas as well as domestic, both. Because in domestic, as I was mentioning, majorly the issue is of inventory pile up and these things, which I think because of the OEM and the last OEM production numbers are increasing, and they are hopeful or expecting better again increased number in the Q4. So obviously the inventory of my at my customer end will be consumed, and will be getting the repeating this thing.
Yeah, sure, sir. And sir, I just wanted to know, I mean, you have faced some uh, domestic slowdown in the bearing sector, but especially in terms.
Hello.
Hello.
Yeah, you were not audible.
Yeah.
Can you please
Okay.
come again?
Yes, yes, sir. So, am I audible now?
Yes.
So, sir, I was saying that in terms of the domestic market, whenever your customers are the biggies of the bearing segment, and they have big plans for the bearings side, in terms of localization and other big capexes, expected from them. So, in that perspective, also, I believe from a medium term perspective, your demand should be good, right?
We expect it to be a good. See, as far as the my one of my customer who are going to start a new plant, and but they have indicated that it would be operationalized or maybe in 26 or so, or we can say still in this, after almost a year of their acquisition, they are into a very primary stage. They are about to decide the range they are going to produce at that particular plant. That is one. In terms of the industrial segment, or maybe a import substitute kind of thing, one of our customers are actively increasing their level, but the pace what we have expected, even the customer what they have expected, it is bit reduced, or rather having a lower growth in that particular level. But again, in the maybe down the line 3-4 months, or in the next fiscal, they are expecting to have this growth in industrial numbers, as well as some kind of alternative manufacturing of and divert into the forging route, hot forging route.
Okay, sure. So you're saying medium term growth is good, but the pace of reduction or execution has reduced to some extent. That's what you're saying.
Yes, yes,
From the
yes,
bearing
yes,
customers. Sure. And sir, in terms of
yes.
auto components, you have spoken about that it's you're seeing a good healthy outlook, and your customers being Allison, GM, Jetpack. I mean, you make precision, high precision components for them. So, in terms of your customers, what is the response, and how is the customer inquiry pipeline looking on that front?
See, let me tell you, even in the domestic market, couple of customers what we have started in this fiscal aggressively, and in the auto component segment, and whatever they have indicated, or rather, they are at the what you say somewhere about 70% of their peak level, and it is being continued. So as far as domestic market is concerned, we are not bit worried for the auto components. And again, we are in dialogues with couple of other domestic customers who are into auto component business, but that may take 6 to 9 months down the line. As far as overseas business is concerned, uh, particularly in Europe, we are getting, or rather, the lifting has been started as far as auto component business is concerned. Ramp up would be down the line 6 months, and we will be expecting overall numbers. You know what I have indicated in the range of 15 to 18% in overall business, where the maximum chunk or maybe the auto component business might be increasing in overseas market more than 20%.
Sure, sure, sure.
Yeah.
Yeah,
Jason, could you join back the queue?
yeah, sure.
We have our next question from Seth. Please unmute your line and ask your question.
Yeah, thanks for the opportunity. So first question is on the revenue recognition. I wanted to understand how is the revenue recognition policy. So we have in terms of exports. So exports would be into two parts, right? CIF and FOB. So when do we book revenues in each of these two cases? And given the Red Sea impact started towards the end of December, so is there some revenue recognition which got postponed to January?
Yeah, see, the revenue recognition, as we have to follow the Indian accounting standards, and as per the standards, as far as CIF is concerned, once the goods received at the customer end or at the warehouse, depending on our terms with the customer, with the few customers, I do have terms whenever they are going to lift from the warehouse, it is the exact point of my revenue recognition. But as far as the our financial numbers are concerned, as we have already export, so it has been booked in the revenue, but it would be considered as an sales in transit. Particularly in Q3, there is an impact of somewhere about 14 crore compared to previous quarter. Previous quarter, it has say, I'll give you a ballpark number, somewhere about say 104 crore was my sales in transit. And in this end of December or rather Q3, it was 118 crore. So 118 crore revenue of this quarter is being postponed to Q4, that is in January, whereas 104 crore revenue added of September quarter into this quarter. So net, I had an impact of 14 crore rupees of my dispatches, which is being considered or postponed to the Q4 of FY24.
Okay. So just in terms of Q4 guidance, when we talked about the guidance given for Q4, which would be Q1, Q2 average, so we should look this impact of 14 crores of postponement over and above that, or you're considering that also?
See, as of now, I am assuming that whatever the level of sales in transit as on 31st December, it would be there in 31st of March. That is what I am expecting. Now, as you know that 14 crore revenue would be added in Q4 of FY24. Now, if I have a quite better numbers in FY24, say for example, I'm again giving a ballpark number, say if I'll dispatch is somewhere about 330 crore rupees of revenue, then maybe the last 45 days revenue, which might be say 125 crore, then so 125 crore would be reduced from my Q4 revenue and 114 crore to be added. So maybe 9-10 crore impact again it would be there. But what I am giving you on my this one declared numbers, it would be in the range of Q1, Q2 or averaging of first half, something like that. Reporting number would be expecting. Yes.
Done. That's useful. Just the second question from my end is on the inventory pile-up issue. We talked about one particular customer. In the previous question, you just talked about you expect in 3Q it to come back. So are we expecting it to come back to 2Q levels, or 2Q was very high level, which is not achievable again for that customer?
No, definitely not to Q2 levels. It would be in the range of Q1.
Okay. Done.
Yeah.
Thanks, Hiren. That's
okay. Thank you.
We have our next question from Mr. Push. Please unmute your line and ask your question.
Hello, am I audible?
Yes.
Yeah, thank you for the opportunity, sir. So I just had two questions. So one was what is our capex plan for the next 2 years, and what would be our utilization levels for the quarter gone by?
You mean to say quarter one of calendar year 25, 24?
So quarter three FY24 utilization levels.
Okay, quarter three utilization was somewhere about uh, 59 to 60 percentage of what we had. As far as the capex for the next 2 years, that is there in FY25 and FY26, it would be in the range of somewhere about 40 crores annually, and that will be for the new forging facility as well as certain value added processes and in machining lines. Again, we are also exploring another investment in the solar for the additional benefit, because to compensate our power consumption. So that is also in pipeline. So that would be there in half in FY25 and majorly in FY26.
Okay, sir. And one last question for the EBITDA margins. Do we see it increasing further more than 23% because of the power savings that we're doing once the demand is on a normal level?
Yes, see, if I go back to my normal level of operations, and the FY25, where I will be having 100% credit of solar generation, there definitely we are expecting margin crossing 23%.
Okay, sir. Thank you.
Yeah, next question from Lakshmi Narayan. Please unmute your line and ask your question. Lakshmi Narayan, please unmute your line and ask your question.
Sorry, yeah. So my question is that what is your top 5 customers contribute to, and whether the large customer is actually part of the top 5 customers who actually there is a reduction in the offtake which you mentioned. Is it among the top 5 customers?
The reduction, what I was mentioning for the domestic bearing ring, yes, the customer is among top 5 to 7. And when I say top 5, it's not a customer, individual customer, it's a customer group. But that particular group is of what you can say number 5th of top 5 number.
Good, good. So how our market share has actually moved in the last 9 months in terms of the domestic market which we cater to the bearings?
Domestic market, we didn't have much of the incremental market share, but definitely in auto component business we have increased, or rather we have added new couple of customers in domestic business, and those customers have also added another components which are on the development stage as of now. So down the line 3 to 4 months, that also to be added in our domestic auto component business. But as far as the market share in these auto components for domestic, it would be difficult for me to tell you, because auto component business, again, it's a wide business, and we are into the range of particular the transmission parts, few of the chassis part, and certain silencer assembly parts like that.
And this thing, is it a reflection of the Indian bearing markets in general, that there is a kind of a slowdown which you are seeing, or is it just it is only a particular customer?
Majority it is there in a particular customer, but apart from that, the Indian the big players, say top 5 who are contributing almost 80% of bearings market, there the top 3 are also having some kind of dip in the particular segment. So
Got it.
it's not that they are telling aggressive numbers, but they are also facing some kind of, that is why the customers have deferred their expansion, or not expansion, but the one customer who is supposed to start their new plant maybe by June 24 or so, it has been deferred because yet they are not able to decide, or rather they are into process of deciding what kind of components to be manufactured at that particular plant.
Got it. So my last question from my side. If you look at your business growth or the business per se, right, how much is actually contributed by um, existing customer and existing products, and how much is contributed by existing customer new products? And then last is like how much is new customers. So if you look at, if you draw a pie chart, how does it break up?
In this 9-month numbers, I would like to say somewhere about 25% of this business is from the new customers, and remaining from my existing one. Again, this new business, new customer business, it is on a initial stage, or rather at the initial SOP. We expect some better ramp up in the by Q1 of next fiscal.
Got it. Got it. So one last, I mean, just one more question. How do you ensure that, what is your order book right now? And over the next 2 years, what's the kind of order book we are sitting?
See, our customers are not giving a confirmed order book for the 2 years or that kind of span. We have a short-term forecast what my customers are giving. As I already stated, that somewhere about in between 105 to 115 crore, something like that on a monthly average. And from next quarter, rather the first quarter of FY25, we are expecting maybe 3 to 5% growth, at least from the new business, or rather from the new customer, quarter on quarter basis.
Got it. Thank you, sir.
We have our next question from Hardik. Please unmute your line and ask your question.
Yeah, hi, can you hear me?
Yes.
So, just continuing on the previous comment, if I look at your 9-month numbers, then they're largely about almost flattish year on year overall revenues. And you said that over 20% or 25% of your business from new customers. So that would then imply that, your existing customers saw a degrowth of 25%. So I'm just wondering, how sticky is the revenue? I mean, the relationship with the customers, can they swing away from us towards the competitors fairly easily? And second is, how do we really track our market share and, ensure that we're not like kind of losing market share?
See, it is not the case like that my customer is moving or changing the supplier or something like that. It is the drastic reduction at their production plant, at their demand. The major reduction in my existing business was from the Europe market, in particularly bearing ring. Let me tell you, till FY23, our maximum, or rather more than 80% of my Europe revenue that comes from the bearing ring only. Now we have started in auto components business over there. So by bearing ring customers and in domestic as well as overseas, they are at their down level, or they are at their reduced level. It's not like that they have diverted certain things or other some orders to the other customers, because whatever they are going to source, it is a single source and exclusive supply what we have. And let me tell you, in one our customer who was not there, or rather who was bit silent in the 2 to 3 months period, now they again started some kind of revival at their level, and they have started giving me orders.
No, that's in Europe. I understand that, but I'm just talking like, I mean, and
Even
Europe is a
in
segment
US,
of the exports.
Yeah, even in US, I was mentioning that one of very big customer for the bearing ring, who is there into automobile bearing, that particular plant is manufacturing automobile bearing only. There also they are facing downfall of more than 25%, something like that. So obviously my supply have been reduced at that level.
Okay. I mean, how are we ensuring that, okay, I mean, export US and Europe is very, I mean, it's a very large market and we're probably small players, but domestically, how are we ensuring we're not losing market share to our competitors, or, I mean, how do we track that?
See, domestic, let me tell you, the top 5 bearing manufacturers, which are contributing almost 80% of bearing business in domestic. So they are my main customers, and they have not, what you say, stopped, or they have not denied to source the components, or rather zero components, and now they are sourcing from others. It's not the case. But what they were sourcing, say 100 components or 100 bearing rings in particular, maybe before couple of quarters, today they are procuring 50, 60, 70 numbers only. So they are not procuring this remaining 30, 40 numbers from other supplier. It is their what you say, production level reduced, and their demand got reduced. So in domestic, whosoever our customers are there, none of the component or have been diverted to somewhere else. So we are having that kind of market share what we have in domestic bearing ring business, which was somewhere about, say, 30, in the range of 35% or something like that.
Okay. So,
Hardik, could you please join back the queue, as we have other participants waiting for the turn?
Sure.
Yeah, we have our next question from Karan. Please unmute your line and ask your question.
Yeah, hello, I'm audible.
Yes.
Yeah, so I just tried to ask the previous question in a different way. In this temporary downturn, how can we improve our efficiency and try to get the market share from, let's say, other players are also manufacturing the bearing rings, unorganized players. So how can we get the market share from them in this temporary downturn? How we can improve our efficiency in this downturn, because we have time as of now to effectively churn or maybe improve our efficiency. That's one thing. And second is
let me answer this first part. Let me answer this
sure.
See,
they do not have the facility of high volume manufacturing, and we have a full-fledged facility to produce high volume parts. So small players do not have such type of equipment where they can produce their high volume requirement. So mainly to our domestic customers, we supply high volume parts in bearing. So
okay.
These are very costly equipment.
And in our kind of business, the supply switchover is not that immediate, or may not be possible in 1 quarter, 2 quarters, something like that. It is having a detailed validation activity, validation processes, etc. So it would be difficult that some my customer, or rather the some player who are sourcing from other players, and in the very next quarter they are just stop supplying over there and that sourcing from me. It is not possible in our kind of business.
And the order what they place, that also after hard negotiation. So that's where we are competitive. That only we get.
Okay.
Yeah, so the small players also got certain commitment from their, the buyers. It's not like that overnight they can switch over.
Okay. So any kind of value addition we can do in our products?
That is continuous process.
Okay.
Particularly in last couple of years, we have added, or rather we have started producing rings which are to be used for EV and hybrid vehicles. So that is a value addition with compared to the traditional bearing ring for the autos. In auto components also, we are giving maybe 1 or 2 additional processes on rough gears, gear blanks, on shafts. So that is a continuous process.
Okay. And what's our cost in the full bearing? I mean, what's our contribution in the full bearing? I think the previous calls 15 to 20%. You said.
See, for generally it is 15 to 20% of this bearing. The ring price is of overall bearing, but again depends on the size and specs of types of bearing. If it is a bigger size of bearing industrial applications where the ring component or ring portion is on a higher side.
Yeah. That all depend on the application of the bearing.
Okay. And over the quarters, you see the margin will improve, right? again on the back 20.
Yes. By gaining the pre-level of production, operating numbers, and with certain cost reduction measures, definitely we'll be getting that our EBITDA, which is a benchmark of 23% or even more than that.
The next capex plan will be increase the capacity, right?
Yes.
Capacity expansion and volume. You didn't share the volume data in your presentation. If you can do this thing, so that will be easy.
We'll check for that. Yeah.
Sure.
Can I request to join back the queue?
Sure. Thank you.
Yeah. We have a last question from so really so we have no further questions. Over to you, Hiren sir, for your closing remarks.
So again, thank you very much to all the participants who were present. And as I was giving confidence or rather assurance to our stakeholders and our even the owners, stakeholders, and the business partners, you can say, we are in the best efforts to get the maximum production efficiency, which will increase my margin and which will increase my overall utilization. And management is very much committed to that. And hope we will be getting, or rather, we will be overcoming all these hurdles and expecting touchwood not to have any other geopolitical issue in the next fiscal, but we do have a quite aggressive or rather the good envisaging and forecasting from our customers existing, but mainly from the new business what we have gained in the fiscal FY25 and FY26. Thank you very much to all of you.
Thank you.